Hey everybody, Brian Shannon here from AlphaTrends.net. It's Friday the 26th of December 2014. The S&P 500 finished the week with a gain of about 1%. The NASDAQ about 2/3%. Russell 2000 up at new highs for the year, gaining 1.38%, bringing that to up 4.5% year to date. Semis gained a little bit of ground. Oil continued lower. It's obviously still in a primary downtrend, and making a purchase makes no sense there. So let's take a look at the market. We'll also look at bonds, of course, which lost a little bit of ground, down 1.1%. For the S&P 500, we came into this week, the market had recaptured the rising 5-day moving average last week, and we continue to see a pattern of higher highs and higher lows above that rising 5-day moving average. So when I say innocent till proven guilty, I mean that we can expect to see that the trend will persist, and we'll see higher prices until we break down below more important levels of support. Now, for next week, I think that this is going to be an important level here at about this 207, where we find the 5-day moving average, about 207.5. So if we break back below 207.5 and stay below it for more than, I'd say, a half hour or so, then you want to get a little bit more defensive. But again, we're innocent till proven guilty, meaning we should expect to continue to see higher prices. There was obviously very light volume this week, but again, only price pays. You can't take volume to the bank. So if you had gains, you celebrate those gains, and you raise your stops on positions if you're concerned about them, and you continue to give the benefit of the doubt to the buyers. For the NASDAQ, we saw key support holding here this week at 104, 103.5 to 104 really. And next week, I think that 104 is going to be our key level that we want to see hold to be able to add to these gains. If we can continue to hold above 104, then we broke a little bit of resistance here today, and I would expect to see the same thing here. Continue to see higher highs and higher lows for the NASDAQ and the Russell 2000. As we know, this is a new closing high for the year that we saw today. So this market, as we noted a couple months ago actually, that we were getting bearish on this market below here, but we had said that from failed moves often come fast moves, and from that failed breakdown that we saw in the fractal of that breakdown here that we saw last week, we've seen a continued move higher to new highs. So a lot of times people will complain about technical analysis that, well, it was breaking down here and you got bearish, but we went back to bullish as the market got back above here, and that's what we've been talking about. Last week I had pointed out in Google that I thought Google had the potential, same type of potential, that from a failed breakdown on this weekly chart could come a fast move higher, and I was referencing that I thought it could get up towards the 50-day moving average at 542, and that's pretty much exactly where we got to today. So today's high 543.25. So I think that after that failed breakdown, we got the fast move higher this week, about a 20-point rally up to that declining 50-day moving average. So I think Google will have to settle down a little bit before we can expect to see further upside in there. Semiconductors also had a good week, and I think that the key level of support we'll want to see hold next week, 54.75 to 55. That's our key area right now. For the financials, right now we did see this week that we got back above that 24.85, 24.90 level. So we'll want to see that hold as support next week. If we continue to hold above there, it's innocent till proven guilty, meaning give the benefit of the doubt to the buyers, and would expect to see higher prices from here. It's really a pretty simple thing. Gold did gain some ground back here today, basically, with again one of these silly gaps. So gold is gaps every single day. That's just if you trade gold, that's what you have to be used to. I had suggested that a stop should go below here, so I'm just not going to talk about gold because, one, I don't like it, I don't trade it, and it's still realistically it's in a primary downtrend, possibly trying to turn back higher here, but very unconvincingly so. The bonds did lose some ground this week, and they are below a declining 5-day moving average right now. So we saw a strong sell-off 3 days ago, and we're bouncing back a little bit from that, but we have a declining 5-day moving average. Other than that, we have a primary uptrend, of course, and this is just a pullback within that primary uptrend, so nothing to be really concerned about. Let's talk about some stocks that we had mentioned and some new ones to look at for next week. Apple, the stock did kind of, it broke past that 20-day moving average, and we had seen it pull back right to the rising 5-day moving average. And today I really wasn't expecting this, but it did break some resistance at that 113.50 level, and now the buyers are back in control once again. So if you're long shares of Apple, absolute worst case stop if you're in a near term would be below this little low at about 112. I'm thinking probably 113 could be a safer level to put that stop. But for next week, I would look for maybe a pullback down towards this 113.50, and then to buy some strength would be a good way to trade that one. Alibaba, we had spoken about a week and a half ago, and we were talking about it breaking past 108, and I'd mentioned that your absolute worst case stop should be at about the break even. So hopefully, if you were involved in Alibaba, you got out, gapped down, and was unable to recover here this week. So Alibaba probably needs a little bit of time to consolidate. Maybe we're going to test that volume weighted average price again, that is since the IPO. GoPro was really kind of a surprise to me. It got back above the volume weighted average price since the IPO, and I am saying that I didn't see a reason to be a purchaser. If you were going to buy GoPro, it would have been a couple days ago, as it was above the rising 5-day moving average and made that higher high above the rising 5-day moving average. That would have been the place to purchase it. But as of a week ago Friday, I did say that I would avoid this stock, and now I think that if we can see it pull back down maybe towards this 64-ish level, find some support, that perhaps we'll be able to see some further upside develop in there. LinkedIn was another one we had spoken about, and I'd said that if you were involved in it, a stop if you were involved from back here, a stop should go around 230. So whether you're not in that or not, I would say your stop should remain down near that level. LinkedIn still looks constructive to me on a daily time frame, and we can see here, let's just scroll down a little bit, that it's holding a nice tight range in here, and the stop near 230 would still make sense. That's 5 points away at this point, but obviously it's a high price stock, and I would say next week look for further upside if it can get back above these recent highs near 37.50-ish. INFN was one that we had gotten involved in a couple weeks ago, and I still like the way the weekly chart looks in here, and I do still hold some call options. As I'd mentioned to subscribers this week, I sold some calls up in this area, and it was basically a double at that point. It's pulled back, and I will consider repurchasing some, but we're below a declining 5-day moving average. I'd suggest that if you were holding stock, that your stop should go at 15.20. So that was a good place to get stopped out. I think next week, if you keep an eye on this one, maybe back above 15.35 would signal to me that the buyers have regained control and would be able to get this stock moving higher once again. For right now, it's just in a little bit of pullback mode, and I would say just give it a little bit of time to prove itself once again that it can in fact rally. Let's take a look at oil. Oil here, we're looking at a 4-hour chart, so each one of these candles represents 4 hours. Last week we saw that, we were talking about if it could get back above 59, perhaps we could see a little bit of a squeeze higher, but the primary trend was still lower and guilty till proven innocent. It didn't get above that 59 level, and we finished the week out under $55 a barrel. This is actually looking like, I can't draw on this, but if I suppose I could, but it's looking a lot like maybe a descending triangle here, where we have these lower highs and we have this support. That if we break down below here, we are in a primary downtrend. It's guilty till proven innocent on the daily time frame. I think that these anyways, on the daily time frame, best case scenario is we're trying to find some support in here, but realistically, again, we are in a primary downtrend. It's guilty till proven innocent. When oil declines, it can collapse. We saw, we looked at it last week on the weekly chart as well, and we saw where we had this prior huge decline of $100 a barrel, and now we're about $60 off the peak now. We could continue back down towards that 40. There's no reason to think it can't. The primary trend is still lower. It's guilty till proven innocent. Now let's go back and take a look at some more stock action. So we just spoke about oil. GMCR was one I was looking at for potential upside this past week, and we were talking about it above 139. It looked like it was going to get going, but it had some weakness here, so there's no reason to be long GMCR right now, as it kind of failed in in there. Google, we had mentioned, had that nice move, and Intel did as well. We spoke about Intel above $37.60. I'm sorry, $36.70. I said that you might want to consider it for a purchase with a stop under here, and I would say raise your stop up to maybe 37 and a dime if you are long it. A couple ideas to keep an eye on for next week. Adobe, I think, is a good-looking stock in here. If we take a look at that daily time frame, we're above all these rising moving averages, and we have a nice tight little consolidation in here recently above this prior resistance. So this resistance is holding as support, and the weekly chart looks like it's building some energy for continuation. I think that if you can get it back above the recent high here, I would say where the momentum should come in is probably above 75 and a quarter, and if you were to get involved in it, maybe a stop near $74.50 a share, and then take partial profits if it can run up towards maybe 77, and then raise your stops from there. Data, and by the way, for subscribers, I am going to have some January effect candidates here to look at that I'm going to put together this weekend. Anyways, shares of data. This is Tableau software. You can see on the weekly chart, it's been stair-stepping higher after getting smashed in the first quarter or second quarter this year. But we now have on the weekly time frame higher highs and higher lows. On the daily time frame, we had just broken some recent resistance here as we're stair-stepping higher. Prior resistance holding the support, prior resistance holding support now. And we've got this nice tight little range in here that if we can break beyond the recent highs, those recent highs 89.95, back above 89.95, I think you could see this stock continue maybe up towards 95 or so, but a stop would then go probably at about I'd say maybe below today's low, so maybe near about 88.20 if you wanted to keep it a little bit tighter, maybe just below that 5-day moving average. As I always say, there's no perfect way to trade these stocks, and when I'm only giving an update once a week on YouTube here, you have to realize that, of course, I'm going to make a lot of adjustments for subscribers during the week, and we're going to look to lock in gains, and that's what I do, is help subscribers with those levels and to adjust their stops. Anyways, another stock to look at for next week is this Endo International, ENDP. I believe it's a pharmaceutical. On this annual chart, you can see this year we've had a pretty tight range recently, and it looks like it's getting ready, building some energy for a break beyond this resistance. I think $73.72, we've seen that hit this past week, and then right here. So for some reason, sellers have turned the stock back at $73.72. If it can clear that 73.72 level, then I think the stage is set for continued upside in the ENDP. And I would say your worst case stop probably down at about 72.50-ish, somewhere around in that area. So that'll do it for today. Hope everyone had a good week, and I will talk to you next week. Thanks for tuning in.